Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1170th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video is coming to you on a Tuesday night for trading Wednesday, May 7th, 2014. A lot of topics on the board tonight. A lot of good stuff. Great charts. You're going to like what's coming. Before we get involved, futures trading is extremely risky, can cause substantial financial loss, and is not suitable for all you cats out there. If you don't recognize that a stop can be your best friend, and if you don't put your stops in first, you don't belong in this arena. If you do understand about risk and you put your stops in, let's get ready to rumble tonight, because boy, oh boy, it's getting tough out there. What's on the board? Red Omni, we got everything that we were looking for in last night's video. Confirmation that we were going to start to fail at those trend lines, that the succession of lower highs and then lower lows and lower highs and lower lows would start to weigh on the market. We got confirmation about that on Tuesday. Looks like Wednesday, that Red Omni will give us some more downside. ES, NASDAQ, Dow, tranny, the usual suspects. Those guys look like they're going to get hit a little bit. Fifth time's a charm, traders. The chart I've been showing you in the tranny, it's got 1, 2, 3, 4. It's got all those boxes. Well, fifth time, down it went. We'll look at some charts about that. There is more in tonight's video than just what's possibly going to happen tomorrow on Wednesday. We know that tomorrow on Wednesday we're looking to sell this market. Fifth time's a charm, right? That's starting to work. We'll look at that chart. The short of it is that we are bearish. For short-term trading, we are looking for the downside, traders, but there are two sides to this market. The short of it and the long of it. The long of it is this. The integrity remains intact on this market. I kid you not. I will show you some charts that will absolutely convince you of one thing right now. It may be going down, and in the short of it, it may look bearish, but unless something dramatic happens, the integrity remains very intact in these long-term charts in the ES, the NASDAQ, this whole gamut. The long-term looks fantastic. Don't lose your heads with the market coming off. I know I removed do not fall in love with the downside off the board because I think we're going to have some time on the downside. But I do not expect a crash. This is not 1929 all over again. It's certainly not 2008 all over again. We are going to have a pullback, if you will. That's what we're having. If you don't think I've been on this or onto it, when's the last time you see me take something like that off my board? I don't know, several times, maybe 4 or 5, if that many, in the 7 years I've been doing videos. Something must be coming if I get that serious about it. So do not fall in love with the downside it used to say. That's been removed. Since then, I've been showing you this chart time after time, video after video. That is starting to take place. I'm referring to the tranny chart with the 5 repetitive patterns. The short of it's bearish. Let me show you that on charts, very. The long of it is very bullish. We'll look at that. And then don't forget the shiny metal is still interesting. The gold still looks interesting here. It looks like it may spend another few days going higher. Traders, with no further ado, let's go look at some charts. Okay, traders, this chart, you've seen it many times. It's got repetitive patterns. I've been showing it to you time and time again. And let me just say this. If this is boring to you, me showing you the same chart over and over as we're catching market moves, you're probably in the wrong business. If this doesn't excite you, you might as well turn off the video now, because you're going to be a chart nerd to love this stuff if you're going to trade it. So anyway, so there's 5 different times the exact same thing happened. We called it the day it got here. It is happening, right? Bingo. We're starting to move down. Each time it was a bit of a substantial move. It wasn't just a teeny one. Each time you had a decent move. So we're just getting warmed up here, right? We have some down coming from this 5th time. So 5th time's a charm. That worked. We're not out of the woods. This chart has been dynamite for us lately, traders. Next, E-mini S&P. Look at this. Remember I showed this to you last night and I said we failed here? Well, miserable failure now because it hit the line, came down, hit it again, settled here at the lows. We've made an all-time high, then we put in a low, we put in a lower high and started to fail from it so far. So this chart is starting to look like, at least short term, this market's going to have to back off a little bit. Then we've got this one, NASDAQ traders. We put in the high, the lower high, lower low, lower high, lower low, lower high, and then we dropped a little and came back to try to put in another high, and it was once again another lower high. That, my friends, is a failure in itself. Then we hit it, and came down here. We hit it again on Tuesday and came all the way down here and settled down here. That is bearish. This is becoming a failure, especially when you see this succession of lower highs and lower lows, and then missing hitting that support or resistance. It's now. You can't get above it. So I tell you what, it's just starting to look a little bit bearish. Let's keep looking. Russell. This chart I've been showing you day after day, and this one I told you, wow, we never even got close. Major failure. This was in yesterday's video. Now with the Russell again, look at how long it's been well entrenched in this series of a low, a high, a lower low, lower high, lower low, lower high, lower low, lower high. But now a bear flag has basically formed. We've gotten below the bear flag and below the 200 bar moving average. Very interesting. That is quite bearish, traders. Take a look at that for yourselves. Russell is pointing towards more downside, at least for short-term trading. Then, of course, we've got the DAX. When you look at the DAX, you say, well, the same thing is happening, right? You put a high in, you come off. You go back up, but the high is lower. You go down, you come back up, and then the high is lower, and it just continues to do that. So this is starting to look like it wants to have a little vacation on the downside as well. But, traders, that's the short term, right? That's the short of it. There's a bigger picture here, of course. What type of market are we in overall? Right now, getting a little bit toppy for a little while, but when you look at the DAX long term, very, very bullish market. So, let's go from the short of it to the long term, the long of it. The integrity is absolutely still intact. Look at this chart. This is the emini S&P weekly bar chart. Back in 2009, this channel started to create itself. It got hit in 09, in 10, in 11, then again in 12, between 11 and 12, or right around then. 2013, you hit the channel. 2014, you got above the channel. The integrity is in great shape right now. Then you see this red channel. We've been in that for quite some time. You can dip all the way down to here on this red channel and still no problem with the integrity of this market. You can get lower than that with no problem with the integrity of this market. So overall, we are not going into a big bear market. Not yet. This says the integrity is still intact. Then we go and we look at this. Let's take this a little further. Let's go out to the monthlies, the real long term of it. Does anybody remember this chart? I showed this to you guys in the beginning of the year, and I said, this is a pattern. I'm not going to go through it all again, but what I showed you is that if this certain type of bar shows up on a monthly, you will absolutely make new highs afterwards. And every one of these that I showed you that were large did work out. This one I found and said, here's where we are, the date that I showed this to you in a video. If you look back in these videos, you will absolutely see this chart. That's the bar that it was, and this is what it's become so far. That was the bar that it was. So far, we've made a high all the way to here. Now, the projection I gave you when I presented these charts to you originally, I showed you all of these, and they had their projections, which they were all met, and the projection on here, just from that formation, comes out to 1986. I'm not calling that a high for the year or anything of that nature. I am showing you that for the long term, our projection is working and should still come. So the chart for the monthly is showing us, once again, that the long-term view is really strongly intact for the bull market at this point in time. Pull your own charts, do your own homework on the indices, then don't forget this little guy back here. We don't want to forget you, buddy. That little shiny metal right there, look at him. The gold, once again, you know, I pointed this out to you and said, hey, got above the 200, broke out of a bull flag. Now you've been above the 200 for a few days, and this may be another little bull flag right here, right? Very nice. We're above the 200. We know the fund managers are going to start looking at it. You've got basically a war starting to break out in Europe. There's a couple of reasons why fundamentally we don't really care, but would bode well with the technical picture. That gold should move higher. So take a look at your gold. Traders, I'll see you at livewithoscar.com. Come join me. So, traders, you've seen the charts. Technical argument for the red Omni is pretty strong for short-term trading, and in all honesty, the technical argument for the integrity of the market remaining intact is even stronger than that argument. This one looks way better than that one, but luckily for short-term trading, that looks pretty good too. So keep it in mind. All right, the integrity is fine. If it changes, I will let you know. Traders, if you like these videos, subscribe on YouTube. Make sure that you when you come to YouTube to see these videos, make sure that you subscribe so that when I put out a video, you will get notification right away. Now, stock site recommendations. We've had ongoing recommendations. It's a new site giving stock recommendations. Just come to livewithoscar.com and click the stock recommendations. So, we've had an ongoing short, BIIB, Biogen, short since 289. We like the downside. Omni recommended that we get short and hold the shorts for the last 2 days. And so far, so good, right? It's in the 285 area now. Omni expects lower. If you'd like to trade stocks like Biogen, come on down to livewithoscar.com and make sure that you hit me up on my stocks. All right, traders, let me get out of here. You Omni campers, I can't wait to see you. It's getting really close now. I'll see you in Vegas in just a short amount of time. Don't forget, get some sleep. Make sure you get in early on Thursday. Make sure you rest, because I'm going to beat you guys to death with as much knowledge as I can. All right, traders, I'll see you at livewithoscar.com. Always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that, especially when you're in a live trade, is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, traders. I'll see you at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.